Hi, this is Zak Mir from Master Investor, the investor conference on April the 25th, featuring Jim Mellon, Nigel Farage, and myself on the charting. Today's bulletin board heroes start off with Europa oil and gas, where we've got this aftermath of an island reversal here from January to earlier this month. The break above the 50-day moving average looks to be the best buy trigger at the moment in the wake of that charting formation. That's lying at 5.91 pence, and really, while we see support coming in above that, one would be quite confident of a move towards the top of a rising December channel as high as 9 pence over the next month or so. Probably the stop loss on the buy argument at the moment back below this support line from December, and the 20-day moving average at 5.41 pence. So looking like a recovery situation for Europa. Online is the next candidate here on the bulletin board heroes front, and here we see this extended base that we've had on the daily chart quite some time now, sort of over the last year and more. What is exciting here from a technical perspective is the way that over the past couple of months the 200-day moving average has started to rise. We had the breakout above the 200-day line as long ago as the end of August, beginning of September last year. So that was the first start of the recovery, trend-changing recovery here for the shares. Current situation looks like we've got this V-shaped bull flag above, well above previous resistance. That was sort of towards 25 pence, and we've got support coming in at the late 20s. The view now is that at least while we hold above the 20-day moving average, that's around 29 pence, the shares could progress as high as the top of a 2013 price channel target at 50 pence plus over the next couple of months. So an encouraging charting situation. The Red Emperor stock, which is sort of features quite highly in terms of the movers in both directions on many days. What we have here is this unfilled gap to the upside through the 50-day moving average. That's at 1.56 pence. That was the first sort of start of this latest recovery attempt after this W-shaped rebound that we had. Bull flag here, which has broken through the 2 pence resistance from January. That's encouraging enough for us to suggest that the shares should head back towards 3.5 pence, maybe 4.5 pence over the next 2 to 3 months. If you're cautious on the shares, maybe wait for a break of the 200-day moving average at 2.51 pence, but that is actually the initial target. And the ideal scenario is that this week or next week we get a weekly close above that feature to sort of cement the idea of recovery over the near term. Last up is SolGold, so personal favorite of mine, but one of the stocks which is sort of definitely worth watching from a technical perspective. Here we've got this the aftermath of this extended base at 2 pence, which was for January and February, break through the 50-day moving average, which is a classic recovery move, and then this what looks like a bull flag here above January resistance. That's around the support for that is around the 3.65 pence level currently. That also looks to be the floor of an October rising trend channel. So while we hold above that, upside target probably as high as this October resistance line projection at 7 pence over the next month. Initial target, the 200-day moving average at 5.46 pence over the next couple of weeks or less. That's it from me. More updates at masterinvestor.co.uk.